Good morning. So I shared a tweet this morning mentioning how I was interested in the 15-minute buy side and balance sell side efficiency. This chart is on regular trading hours. I'm going to toggle it just to electronic trading hours just for a moment. That's the buy side and balance sell side efficiency. Delivery on the upside only, so delivery on the downside would be expected. We have that here. This shaded area in blue, you can see that on the regular trading hours. On the Thursday, June 29th, 2023 to Friday, 9:30 a.m., that opening range gap has been open since then. Now we're seeing it where we closed yesterday. Here's the settlement at regular trading hours. And all of these little annotations in here, are all these on a electronic trading hour chart. And this chart here is in electronic trading hours. So this is regular trading hours. It can be a little bit confusing, but it's important that you study your data like this, and you can see the setups that are being made available. So 5 handles, easy, and then what you do is over time, you watch and see, does price gravitate towards lower targets for you to trust leaving a runner on. But it starts with trying to find something, you get 5 handles, and then build from there. Beautiful little sell stop entry off multiple fair value gaps, then a volume imbalance, and then further downside. The low here is the low here on this chart. All right, so I'm inside of this 1050 to 1110 macro trade. I've accumulated a large position with the 10 to 1015 SIBI. So all of that's time distortion. I'm going to place a group of partials in the form of limit orders to sell right above the high formed at 10 o'clock in the morning. I'm aiming for that fair value gap in the form of a SIBI at 15,290. Okay, so I have the buy side liquidity. Now that's been taken as a partial down to the low of the SIBI, nearing the high. It's formed around 8:30 during the knockout payroll. That'll get filled here next. There we go. And in the high of the SIBI. There you go. How's that for nonsense? These guys on YouTube, man. Twitter. Goobers. I'm going to run up and take out that buy side liquidity at the high today. And that'll be done for today. You gotta wait for the afternoon. You don't trade in the morning sessions around from payroll release, because that's amateur hour. You get slapped around. And when the liquidity is established, we've seen that Sell side taken out at 10:30, so now buy side is the lunch macro. It begins here at the 10:50 to 11:10. So that's a nice little drop on short-term sell side liquidity. Have ourselves a thunderstorm here at present. Okay, here we go. Should rip up there and take out the buy side. Alright, so I have a very long version of this one. It's 40 minutes of me actually talking about most of what's occurring here. It's very, very boring. It's very dry. If you wanted to see that one, and this is a voiceover what I'm doing here, but I promise you it's not all that enlightening. It's just me talking about what I think is going to happen. How I started the day up here trying to get a losing trade because someone said show me a losing trade, but then when it failed to be a loser because I wanted to see it get stopped out and show that on Twitter, I actually identified it as the smart money reversal and low risk sell, which I actually sold short it. And then I did the second stage distribution here, market maker sell model, which is not white though, by the way. So you can see some of the partials here. I'm going to sell short rate when it bangs into the bottom of that yellow buy side imbalance, sell side efficiency, proving again authorship, not supply and demand. There you go, boom, hit it. And you'll actually hear me talk about that if you are successful in encouraging me to put the full thing up there. It's 40 minutes long. I was all over this thing today. Like I literally whipped NASDAQ pretty bad. So I'm looking for that. There, I'm showing you that it's got a fair value gap and the sell side resting below the 1220 lows, which is the original consolidation for a market maker sell model. So I'm lowering the stop. It should not come back up and touch the bottom of that yellow box, which is the buy side imbalance, sell side efficiency, and it should sell off here because there's a small little gap there, and we're inside the 3 o'clock hour, so it needs to seek the sell side below 15,289.25, and then the fair value gap shaded in blue. And one partial and lower the stop. It should not come back up for that, but if it does, that's fine. The next buy ends. I'm going to go short here and reach for that sell side liquidity at 577 and a quarter, or 175 rather. So that was a run on buy side liquidity. I'm going to add more at the breaker. That is the level I was watching, which is a bearish order block and bearish breaker. I'm going to do some standard deviation work here. It's already hit the one standard deviation for like a scalp, but I'm aiming for down here. So I have a depth of market on to the right that apparently just got added to trading deal. I'm just showing you it actually has no bearing whatsoever on what I'm doing. So that's the swing that we use for the low hanging fruit objective, but I'm using it more or less as a swing model now, aiming for a larger pool of liquidity, and I'm going to adjust it so that way my limit order should fill with that projection. Okay, just sitting here waiting for it to deliver as expected. And yes, I'm showing you an example with the paper trading module. Some foreshadowing. So let me show you where this trade's executions were, and I'll show you where the sell side liquidity pool is. Take a gander at those fills. We'll get rid of that, and let's scrub this over here. Let you see where the sell side relative equal lows are. Right there. Okay. Hope you found it insightful. Be safe.